Welcome, traders, Topstep team, trading family. Welcome to yet another excellent session with Jared Tendler. Now, if you don't know Jared, you should. He's a prolific author. He's written 3 books on performance. The Mental Game of Gambling 1, Gambling 2, and this one, The Mental Game of Trading. We feel very lucky and excited to have Jared here every time we have him here. And we have to give Jared a special congratulations as he has qualified for the Philly Open. Jared is a awesome golfer, and he succeeded by sucking just a little less.
That is exactly right, John. That was a very, very important suck less kind of round. Played on Monday at a golf course I'd never played before, which is always a little bit tricky. And in the middle of the round, I knew I was kind of close. Usually, 3-4 over par will get you in, and I was 2 over through 12, and mine starts to get a little, ahead of yourself, started to get a little protecty, and I had to have a little talking to myself. So made a couple bogeys, but steered the ship, made a birdie coming in, and finished 3 over. So yeah, get to play against some good pros, good in the area.
Congratulations!
So it'll be a lot of fun.
I'm excited for you. That's fantastic. And again, congratulations. So
yeah, thank you.
Without further ado, I'm going to hand it over to you. Have a great session. And I know everybody's very excited to hear everything that you have to say.
Awesome. Thanks, John. Appreciate it. And appreciate it being here as always. A lot of fun to answer your questions here at Topstep. Great kind of family environment here, which makes it a lot of fun for me. So got some questions that have come in advance. There'll be questions that'll be kind of fed to me. For those of you who want to ask questions live, by all means, please do that. I'm going to keep an eye kind of on the chat as well. So let's get to it. So first question is, how do you keep the gambling mentality in check while allowing a little risk within your trading? I've struggled with just blowing up the account time and time again. And so you're not alone in facing that problem, right? And the repetitive blowups. The key, and I say key, not as an easy thing, but as a thing to strive for, is to find where the line is and then try to pull yourself back before you get to that point, and stop it ahead of time. So there's a tool that I use called kind of mapping your pattern. And actually, we're going to start maybe the screen share a little bit faster than I thought originally. I just kind of pulled this up. This is a very kind of basic example of one that we can use here. This is called an anger profile. In the book, The Mental Game of Trading, I call it mapping. This is just kind of another way of looking at it. This is from a client, right? And this is just a basic example. I don't want to give you a more elaborate one that had come from clients that have been really working on this. This is kind of a first draft of what we can look at here. So here you can see like anger level 2, right? Anger level 1 for this trader he's in a good mentality. Level 2, mentally off at the start of the day, already realized that there's something going on here. Okay, then there's a missed trade or a missed breakout causes FOMO and greed. So there's a bit of kind of anger, FOMO, greed in here. Level 5, right? Now there's a question here about like kind of what emotion, but it's clear that they're not thinking right, or getting into the next trade late. And then level 7, feeling this intense revenge, trying to make up for what was missed. And then I highlighted this because this is obviously a much more extreme level of this, taking more bad trades and upset that I'm taking all of these losses and it's my fault. Very, very self-critical. And then we get to level 10, desperation. Desperation is really where the gambling, so to speak, gets wildly out of control. So if you're going to keep your gambling mentality in check, you got to find where the line is. And so for this particular trader, that line is at level 5, right? At this level, right, there's already like significant mistakes being made, and the likelihood of additional mistakes being made on top of that, or losses piling on top of that, become very, very high, which means that the snowball is kind of already rolling down the hill, and this thing is likely to get too large for you to be able to control. Because as a reminder, and maybe this is new for some of you, the emotional system has the power to shut down your ability to think, plan, make decisions, and ultimately control your emotions. So you have to catch the early warning signs. That's what the purpose of doing this map is. So this trader knows now that when there is a mistrade or a misbreakout, and that fear or greed or anger has been triggered, that they have to take significant action at that point. Because if they don't, then the whole spiral is, we're not going to say probabilistically likely to occur, but it certainly is way more likely than we want. Even if it's 30 or 40%, that's very, very high. So yeah, if you're going to keep that gambling mentality in check, you gotta define and recognize these early warning signs very quickly. And I'm actually going to show the next kind of piece that's going to help you to build this, and it's going to answer kind of the next question as well. But this is called a data collection worksheet. Okay, so this is just a kind of a blank version of it, and you can see this is just kind of carbon copied worksheet that you can use. It's kind of side by side. But basically, what we're looking at here is the instrument and situation, the trigger, the thoughts, the emotions, behaviors, actions, change in your decision making. So the actual process with which you're making trading decisions, change in market perception, right? Change in how you're viewing your positions, change in how you're viewing even indicators, and then ultimately what the mistakes are. So you can capture this data at any point during the trading day. You can do it after you make a mistake. You can do it when you recognize that something has been triggered. So for example, right, you miss out on a trade and the FOMO starts to kick up, but you just the missing out is enough. You write down the trigger, and then you can start capturing what else starts to go through your mind at that time. What emotions are at play? How do your actions or behaviors, physical signs begin to change, right? So all of this data is really critical because we're trying to identify the patterning that exists within your own mental and emotional state. If you can see that patterning, then you get to kind of use your skills as a trader of being able to see patterns, see opportunity, but just now kind of weaponized for yourself. Okay, and so that's ultimately how we build that map. So the previous document I was showing you is you take this data collection again and again and again, day over day, and ultimately you start to see some patterns emerge. So here's an example of it, just so you have a little bit more clarity, right? So example over on this side, right? Trigger is closing out a big winner after a string of winning days. The thought is, I finally cracked the code. The emotion is euphoria and feeling so good. So it's clear that there's overconfidence that's kind of building here. Behavior, looking for opportunities rather than letting them come to me. Change in decision-making, thinking about all the good things that could happen, right? Change in perception, seeing opportunities at bad levels, and then ultimately trading larger and less likely to take profit. So this is something that is, I'm not going to say easy to do, because for some of you, you're not going to necessarily see the trigger right away. You're going to make some mistakes, and then you're going to have to backtrack and use your memory to understand what thoughts and emotions were at play at that time. But I do promise you that this is a skill, that you are building awareness for the patterning that exists within you. And when you take that awareness and start to use it in real time, that is how you can keep that gambling mentality in check. Okay, it's not something that is like easily controlled, and especially because the intensity of it gets so high, right? The emotions that are driving it, right? Whether that's desperation, whether that's the hatred of losing, whether it's revenge, right? There's a lot of emotions that can really drive the mistakes that are causing you to blow your accounts again and again. But I can promise you that the patterning that you're going through is happening again and again. So take some time to review previous blowouts. Be honest with yourself about what the sort of escalation looks like, and then make sure that you're giving yourself breathing room to take very aggressive action several steps before this sort of before the point where it's you're no longer able to control it. The analogy I'd use is, here you've kind of taken a wrong turn, right? Your mind has deviated from an ideal or optimal path, and you're kind of driving down this road. And if you don't see the warning signs that say, like, hey, the bridge is out, like, you're just going to kind of drive off a cliff. And in this case, right, the blowouts you're describing kind of have that. So what this process is doing is kind of trying to erect those road signs that tell you like danger ahead, turn around, right? And so many of you kind of know these, but you haven't trained it well enough so that it's very strong and gives you that extra kind of kick in the ass to be able to take action. Because you don't want to just sort of see that warning sign and just drive right by it, right? And believe that it's kind of okay. We have causality that gets created. If I feel like I've cracked the code, right, it means that I'm overconfident and my decision making is compromised. I will lose money eventually because my decision making is poor. If I recognize that, from the other side, right, I'm hyper focused on reaching my daily goals, and here I am losing money. That thought is going to either be related to and or trigger a feeling of revenge. And so there's clear causality. That's what we're trying to create here. It's a map that we want. The data collection is kind of how you get to create that map. And then once you have it, now the question is like, can you actually take the action prematurely, well before the blowouts are even like the potential of them is still very low. So the next question, actually, we can kind of stay on the screen here for a second, because the question is like, how do I distinguish my emotions from underlying flaws you discussed in your book? So this is a good question. So for those that are not familiar with the book, there's sort of a shift in perspective on emotion that I present. And the shift is that emotions, much like the thoughts, behaviors, actions, etc., expressed here, they are like the signal of the real problem. The real problem is the underlying flaws, biases, wishes, illusions that ultimately are what are creating the trading mistakes, the emotions that you're experiencing. So just to give you a couple examples, believing that mistakes should never happen, believing that you should profit from every trade, expecting to always be at your best, the confirmation bias, the hindsight bias, believing that you can avoid mistakes, believing you can avoid losses. These are just kind of a handful of the flaws that are expressed in the book. Wishing that you could make money every day, hoping that your actions are correct, the illusion of emotional control, a handful of others. These are the cause of the emotional, mental volatility that you're experiencing day to day. And the way I can kind of prove this to you is that if you were walking down the street and you started feeling pain in your foot, you're going to ask why. You're not going to just keep walking with extreme pain. And you're going to, in kind of asking that why question, like, what if it's just as simple as there was a rock in your shoe? So pain was a signal of the rock in your shoe. We would never say that the pain is the problem. And even if it was not a rock, let's say it was actually, you have plantar fasciitis, or you've got, something going on with your Achilles, right? There's a problem that is producing that pain signal. So emotions, the thoughts, by and large, are a signal of these sort of rocks in the back of your mind. And that is the flaws, emotions, illusions, etc., that are running in the background. So how do you distinguish those underlying flaws from the emotions? Well, the data collection worksheet can help you to do that, because everything that's listed here is not the flaw or the bias, but everything that's listed here is going to help you to decode and figure out what is the underlying bias, right? So we look at this thought, right? I finally cracked the code. Well, what would someone have to believe in order to have that thought and to feel so euphoric and so good? They have to believe that it's possible to own trading. They have to, that it's possible to develop this perfect strategy that's always going to work and mint you money for the rest of your life. Deep down, you have to have that belief. I mean, something like that in order to have that thought, in order to have that emotion, right? We look at the other one. I get hyper focused on reaching my daily goals, and feel this revenge that I'm and angry that I'm in this spot. The underlying flaw that could be here would be the expectation that you're going to reach your daily profit target every single day. And that's a simple one, right? Of course, then what if you're, of course, then going to get angry as a result. The anger is not the problem. The anger is, a signal, and it ultimately becomes another component to what you can use to help decode what those underlying flaws are. There's another tool I use called the mental hand history. I have to pull up another example of that, but yeah, it's just my process for kind of uncovering and getting to the root. But I don't want to get too complicated right now for all you. So we can stop the screen share. And I did see the question that came in where you can get these documents. They're freely available on my website, jaredtendler.com. And then there's other worksheets that you can get as well to help you work on your mental game. All right, next question. After being consistently profitable for a month, I come off another month of having 30 straight losses. What can I do to recover from this psychologically? What should I be prioritizing and focusing on? So, number one, I think you want to be making sure that technically there's not like kind of big holes in your strategy or approach. And, that's not to say that the profitable month didn't have them too, right? Sometimes profiting can leave you a little bit overconfident, a little bit weak in terms of the degree to which you're willing to kind of continue to work. But yeah, I want to make sure you're technically on solid ground. And so Hogue and the others at Topstep will kind of help you there. Let's assume that that's the case, that you are. If you have 30 straight losses, execution has to have been poor. So yeah, data collection and or mapping is going to be your friend. But the recovery is kind of a key component here. So it's very likely there's a buildup of emotion, whether it be loss of confidence, whether it be anger, whether it be fear. And so I would try to write out a lot of what's kind of going through your mind from that standpoint, right? And it may be the kind of thing you do for a couple of days at 10, 15 minutes at a time, just kind of dumping out the overall feelings that you have, the thoughts that you're having about trading, et cetera. Because when all that is kind of stuck in your head, it makes it hard to see things objectively and clearly again. And, you have 30 straight losses, you're in a bad spot. It's just harder to have the right perception, right? It's harder to have the right perspective on positions and to be able to trust yourself in the way that you trust your execution in the way that you potentially could. So getting all that emotion out does a couple of things. It helps to create a bit more clarity. It also will help you to start to look at this more clearly and see what flaws, biases, wishes, illusions exist in there that ultimately need to get cleaned up and corrected in order for your execution to be better. Because it's just unlikely that your execution was perfect through that. And you were only selecting the highest quality trade setups to have 30 straight losses. Now, I'm not saying it's not possible. It certainly can be. But execution has to get cleaned up as well, most likely. All right. Let's see. More questions here. I feel when I get stuck in the red, it can last days. Yet a green day will show up for 30 minutes, then collapse. How do I become better at capturing that profit without leaving a ton on the table? Again, make sure that you're structurally sound on a strategic standpoint, technical standpoint. There's oftentimes, I can think, an overemphasis on mentality and emotions. Some people believe that trading is 100% about your psychology, and I think that is wrong on so many levels. Number one, it kind of diminishes the experience and knowledge that traders like Hogue have and have developed over years and years. I'm not a professional trader, and one of the reasons I'm not is because I understand how much freaking work is required to become proficient and skilled. And I'm not willing to put in the time. I've got goals that I have for my own coaching. Golf is the area that I compete in. So, just like I didn't become a poker player either, right? I know where I, have the love and passion to be great. And that's in this and in golf. So yeah, let's not mistake the raw technique, skill, knowledge that's required from a technical standpoint. That's not also remove the idea that there's, yes, like a psychological fingerprint that you're bringing into the market that is uniquely yours. And that's one of the cool things about trading is the variety of ways that it's, you can make money in this game. There's so many ways you can. And I think that's very cool. But it also puts some demands on better understanding yourself and how best that you can kind of see the market, which markets kind of really you're passionate about, what positions and setups you get excited by, and being able to understand that, yes, is a psychological phenomenon, but it's sort of this back and forth between, learning more about the nuances and technicalities of the market while also understanding yourself better. And I think trading, like a lot of things, forces you to kind of peel back layers of yourself. And that self-understanding is really critical. So yes, that is a big kind of psychological part, but like at the end of the day, trading is still not 100% psychology. So there's a large technical component. Do not diminish the importance of that. So going back to this, like, how can you not get stuck in the red? Same kind of ideas I'm presenting so far, right? What's the main reason that being, red or having some losses, is kind of rapturing your mind? Like, what are you getting stuck on, right? Is it the losses in general, and you're the kind of person that just is very, very competitive and you hate losing? Is it the losses like demotivate you and, it feels like there's steps backwards, and or does the losses like spark fear that you're never going to make it and not be able to get a funded account or be able to be as profitable as you want, right? You got to understand more about what's happening at that time. The green day, showing up for 30 minutes, just the way that's framed is reflecting, I think, kind of a basic understanding about what trading looks like at that point, right? It's not necessarily about like the day lasting for 30 minutes. Like, what are you like kind of overreacting to at that time? Because some individual trades might last more than 30 minutes. If you're taking more frequent trades or having multiple positions open at once, I don't know, it feels like you're in kind of like an incubating stage here of like kind of figuring out how to actually get and acquire the technical proficiency to manage those positions. And when you don't have that, then the fear and the desire to like lock up that profit very quickly, can show up. And if it's not, and these positions are just reversing and stopping you out, then they may not necessarily be as viable as you expected them to be. How are you not capturing all the profit that you're leaving on the table? The profit's kind of determined by the setup and what your targets are at the start of that, for the most part. I mean, I think it's kind of more in Hoag's and others at Topstep's domain there to kind of help you to manage those positions better.
Hey, Jared, can I intersect something here? I think what this particular trader is experiencing is just human nature. Nobody likes to take losses, so we avoid them. Everybody likes to take profits, so we take them. It's kind of like, in the real world, if you see a $5 bill on the sidewalk, you're going to pick it up. Well, you're probably going to step on it first, look around to see if anybody sees you, and then you're going to pick it up. But in the trading environment, you may have to step over that 5 to catch the 50 that's further down the road. And it's just human nature. Everybody seems to cut profits too early and let losers go too long. Couple of things. I love your idea of the illusion of emotional control. I think you can control things for a minute or two, but eventually the emotions are going to take over. And what you mentioned about, the compromise in decision making when you are emotional, angry, upset, greedy, whatever it is. It's one thing to recognize that you are even in that place. And it's another thing that's hard enough to even recognize. Many people probably don't even know that that's compromising their decision-making process. It's so difficult to then take your hand off the mouse, walk away, and it's how do you do that? How is it just a matter of willpower? And once you are stepped away, how can we do things to release what I call the venom? Anything that's angry or anything like that, that's venom, and you have to release that venom, get back to center before you can end that red period or even get out of the sand trap?
Yeah, so good questions there. The latter, I'll go backwards, right? So the release of that venom is similar to what I mentioned earlier, just kind of doing that dump of emotions and thoughts on paper, on the computer, get it all out so you can look at it. It's not as helpful to, just go for a run, have a few drinks, blow off steam in some way, shape, or form. Because all that is just a very kind of a temporary release. Like you're just going to kind of dump it out, and then you're going to stick, that glass under a leaky faucet, and it's just going to fill right back up. Like we want to figure out what's causing all that venom, all that emotion to build up, and that data to help us to do that is captured in our mind, in our emotions. And so expressing that in a very functional, practical way helps you to not only release it in the short term, but then also build towards that longer term solution.
The importance of the hand document, the importance of the documents that you've already showed us today. I mean, I do something similar. I call it an emotional journal, where I track emotions during trades and throughout the trading day and review those at the end of the day.
Fantastic.
You're going a lot deeper than I do, and I really appreciate that.
Yeah, I mean, it's just adding a bit more specificity. There's not going to be every situation where you're going to have a specific action or behavior associated with it, but for the most part, you're going to have some thought, right? That's the most basic way. Sometimes there are thoughts that arise. There's not really an emotional experience, right? So the early stages of, let's say, revenge may be, like just like you're focusing a little bit more on your P&L, and you actually are looking at it more frequently. You don't feel the revenge, but you wouldn't do that action in a solid, sober state of mind where you're balanced and emotionally neutral. So those early warning signs become really, really critical to being able to take the actions that we're talking about. And I saw somebody in the chat mentioned my concept of injecting logic. So you were asking earlier, like, how do you then kind of disrupt, get yourself out of the red when you're in a very red mentality? Because that hatred of losing is very strong. And so the injection of logic is like just a fancy word for thinking, but it's prepared thought, and it's thought that is designed to correct the cause of that emotion. So, something as simple as, trading does not allow me to win or make money from every trade, would be an example of something that is logical, may not be the perfect thing, right, for everybody, but logical. Now you train it, you prepare it before you trade, and you review it and think that way multiple times throughout the day. And that ultimately is going to help you to be more balanced. Now, on the flip side, to capture more of the profit and to step over the $5 bill and get to the 50, the logic there could be something like the risk of losing this money, right, is actually far greater. Well, let me say this again. There's like a risk calculation in your mind that's off. The risk of stepping over this is actually far lower for my trading career than the risk of grabbing it. Because if I keep grabbing the $5 and these small little profits, you're effectively guaranteeing that you're not going to be successful, or not nearly to the extent that you can be. So being able to learn how to actually take the appropriate risk here, which is actually lower. It's just so easy to kind of want that immediacy, to get that immediate feedback. And in a trader like that, which we're not assuming that this question is being asked by somebody who is, there's just a lack of confidence that allows you to know that you're going to have predictability into the future. You're looking for something to make you feel confident. It's not about the money. You want the money to reinforce the fact that, oh, okay, I made some money, I can feel good.
Right.
But truthfully, you made money the wrong way and you should feel bad. And that kind of is like, crafting an injecting logic statement that captures that idea, brings it into that moment, can help you to just take your hand off the mouse just enough to let it go a little bit longer, right? And then, okay, so let's say you still close out prematurely, but you sucked less, and you were able to not take it immediately, right? You were able to kind of carve 5 more minutes out where you were able to tolerate the tension of being in that trade. Cool. All right. You took it, but you made progress. And that's what we want to see. We don't want to see the repetitive mistakes again and again. We want to see 5 more minutes, 10 more minutes. Cool. Eventually,
graduated improvement.
Exactly. Yeah.
Great
job. It's building muscle, right? I mean, you can't go to the gym and lift. If you can't lift 100 pounds, you got to start with what you can and then build off of that. And that's the whole point.
Baby steps.
Baby steps.
The inchworm.
Bill Murray.
The inchworm.
The inchworm.
There you go.
It all fits together.
All right. Thank you for fielding my question.
No. Listen. Thanks for your elaboration. That's good. Obviously needed. All right. So next question. I see there are a bunch of questions in here. Live in the chat, which I will get to shortly. I would like to hear how a trader can stick to his own rules no matter what. So similar kind of answers here, right? The violation of your rules is something that you want to have a clear map of, clear understanding of why it is occurring, right? If you just force yourself to adhere to your rules, it's very likely that you're going to experience a lot of, kind of internal tension, and emotion can start to build over time. And you might feel in the short term that you're actually on solid ground, but meanwhile, it's like a volcano that is slowly kind of simmering and building until there's an explosion. So temporarily, it's I'm not going to say easy, but you just force yourself to do it. You can, but it's not necessarily going to hold up, because we need to understand why it is that you're violating those rules. And there's a lot of reasons that I've already mentioned today that can get you to do that, to cause you to violate it. And so then again, over time, you find those kind of pockets where you're getting pulled off. So it could be, let's say, 10:30 every morning. FOMO is likely to occur because I've probably missed some positions. I can sense that other traders have made money, and here I am kind of holding the bag on a few losers and seeing the missed opportunities. So I'm not saying 10:30 on the dot, but like in that time frame within the day, that's when I'm most at risk for making, for not sticking to my own rules. I was able to hold them early on, but then those losses mount, those missed opportunities mount, and then I'm liable to break my rules. So what are you going to do, right? You're going to take that short break. You're going to talk to yourself. You remind yourself like what your goals are and how important it is for you to adhere to a process that is going to give you the opportunity to achieve your goals. The violation of discipline is a discipline issue when there's not extreme negative emotion at play, right? Anger, FOMO, fear, loss of confidence, overconfidence, right? Violations of discipline are more likely to occur in a pure sense when you're bored, when you're distracted, you're procrastinating. You're just kind of lacking the energy you need to actually adhere to it. So the point here is that if you know that it's an emotional issue, it's not really a discipline issue. The violation of those rules is not pure. It's kind of in the category of things I've already talked about. If it's in the latter, where you're lacking the energy to drive your ability to adhere those rules, so then like kind of tapping into your goals and motivating yourself is like the how you can stick to it better in those times where you may lack it. All right, let's get to a few questions that have come in. Isn't it true that golf is easier to master than trading because there's no money involved? I mean, what are we talking about mastery? I mean, I don't think that that's true by any means. And I think for some people, they will master trading a lot faster, and other golfers will master golf faster than some traders. I mean, it's a personal thing. Mastery requires a lot of things. And like I said, I think passion and love, enjoyment for what you're doing is a requirement to be able to have true mastery. Otherwise, you can be really good at something, but to be elite, you've got to have kind of that next level love and passion for it, because then you're going to kind of do all the extra stuff that most people aren't going to do. And there's going to be something kind of naturally in you that allows you to see things that others can't. Next question. After diving deep into the data collection and mapping, how long would you say it takes to get over the psychological issues that hold us back from consistent profitability? So the implication there, right, with the how long does it take to get over a psychological issue, suggests kind of like the how long would it take for me to get used to having the rock in my shoe? I feel the pain regularly. I know that it's there. How long is it going to take me to get used to it? Versus actually understanding what the flaw, the illusion, the bias, the wish is, examining it, breaking it down, and correcting it. So this is another kind of divergence in my system from what many of you are familiar with. Like, emotional issues can be solved. Your emotions will always remain as a source of sensation, of data, right? So for example, traders at Hoag's level, they are capable of using fear, sometimes even anger, confidence, right, as a signal of market-based intuition, right? They sense that something has changed. They can't quite fully articulate it, but they just have this kind of overwhelming sense or feeling of what's going on. Those emotions are helping to guide you to make very, very high-level decisions, right? We never want to turn those off, much like you would never want to turn off, right, the pain signal to tell you that there's a freaking rock in your shoe or there's something wrong. But when you actually remove like particular problems, when you correct particular injuries or biases or flaws, then you no longer are going to get triggered emotionally for that reason. So for example, let's just say you have an excessive competitiveness. And so your hatred of losing is not just something that came up in trading. It's been something you've had for years and years and years. Okay. Now, if we're able to kind of, let's say, correct, in this case, it would be maybe like a confidence issue that was kind of linked to it, that losing really affected your confidence early in your life. Now you feel quite confident. And so the kind of reconciling of this, the resolving of this issue is quite easy. You can realize, like, all right, losing doesn't change who I am. Losing doesn't tell me that I'm a good or bad trader. Like, I can define my own relative success in non-monetary terms, right? I can see when I'm trading well. I can see when I'm making progress. I can see the opportunities that lie in front of me, and I can see that I'm moving in the direction. So short-term losses, yeah, I'm not saying I'm happy with it, but it also is not going to trigger me to violate my rules and do things that are ultimately going to undercut my progress and success. So what I'm saying here is that by having that understanding in this particular example, the triggers for anger and ultimately, mistakes thereafter are no longer triggered. Does this person no longer have the potential to be angry? Of course they don't. There can be many other reasons with which anger or frustration or irritation can get triggered. Okay. So we're not trying to remove emotion. We're trying to remove the cause of very specific pain points that exist that cause problems. So for you, that's what we're trying to do here. The mental hand history is my tool for doing that. Let me see if I can find an example. Got a document or a folder open. I don't know if this is. It's gonna be kind of random. Which ones I pull up here. Let's see if we get lucky. All right, we'll just start with this one. All right, so describe the problem. I have not become a successful trader, even though I believe I have the skill and know-how after building 2 successful businesses in a cutthroat environment, which was tough. In West Africa, in a country going through civil war, there's an urgency to make money. I used to and believe trading was the way to do it, and I'm really good in my sim account. Okay, so that's step 1. Step 2, explain why it makes logical sense that you have this problem or why you think, feel, or react this way. Okay, so it's really key that you are changing the way in which you approach problem solving. This question helps you to do that. Many people think that their problems are irrational or illogical, okay? But they're not when we start to dig a bit deeper. Why does it make logical sense? I have not given trading the respect it deserves. I have not given it 100% attention. I allow interruptions when I should be fully focused on my work during and after market hours. The first 2 businesses, I lived only for work. I had 2 business partners and coworkers to share the load. Trading for me is a one-person entity where I must do all it while being at home, taking care of kids. So eventually you can start to see, look, the expectations that are in here, right? That prior success means that I should be successful in trading are kind of immediately getting thrown a little bit of shade here, right? There's a little bit of lack of understanding that's now being expressed. Okay. So why is that flawed? Even though I had failed ventures in the past, having succeeded in business ventures does not automatically guarantee that I will have a successful trading career. This right here is the underlying flaw, right? They were expecting that prior success guaranteed success in trading. And so the issues at the top, right? This urgency to make money, expecting to be good in the sim account, in the live market, just like in the sim, right? Was creating a lot of emotional volatility, but really it was this expectation that you'd have a successful trading career, right? My confidence and belief that I would make it in trading has led me initially to treat trading as a part-time business that I could fit around my lifestyle, which I now know is not the case. Ironically, my confidence I had in my ability to make money has now led to a lack of confidence, meaning they were overconfident about their viability. Now, right, realizing, I think, a bit more soberly, like what's actually required. So thinking trading would make you the amount of money you'd have in the past is a fool's dream. It takes time to build yourself into a capable trader, which you wanted to achieve in the next day or one next trade or next trading day, right? Trading is a completely different profession to which I'm used to. I must develop the tactical and psychological skills to perform as such, and this takes time. So this actually was a great example. So let me just go through the steps again. So it's describe the problem in detail. Be really honest with yourself about why it makes logical sense, right, that you have this problem. This is the hardest step for people to complete because it's a big shift from how they're usually thinking, which is this problem is stupid. I shouldn't get so pissed off. I shouldn't have this FOMO, right? But there are legitimate reasons for it. And when you identify the legitimate reasons, then we can explain why those reasons are flawed and identify the rock in the back of your mind. And then this becomes what you are correcting. Okay. It's a very different shift in perspective on how you problem solve, right? We're not just sort of taking the problem and coming up with a solution. We're taking the problem and we're digging down to understand the very surgical, specific reason for why that problem exists. And then we're correcting that. So the injecting logic, right? We identify in steps 4 and step 5, come up with a correction. Why is that correction correct? That becomes kind of like the weed killer that you're injecting into the roots of a weed, right? You don't just pull the weed out from the top. Nothing really happens. The sucker's going to grow back, right? Your problems are going to reemerge. It's identify the problem. That's identifying the point with which you start digging. So we go back to the data collection worksheet here, right? The euphoria, this thought of finally cracking the code. That's the information we find on the surface that you're then using the mental hand history to dig down and identify the root cause. And then the correction, the injecting logic is correcting the root, not what you're seeing on the surface. Okay. We'll end that rant there. Hopefully that made sense. I know it can be a little confusing, but the book is really designed to help you walk you through creating these tools and dissecting your brain, decoding what's going on for you in a very surgical manner. And it takes some work. I think anything done right does. There's no easy answers here. I think that's like if you're struggling with trading and struggling with your emotions and struggling with your mental game in the way many of you are, it tells me that by and large, like the simple, easy advice on trading psychology hasn't worked for you, which means that the problem is just a little more complicated. It's neither here nor there. It just means that you got to do more work in order to really, kind of crack these issues in a more profound way. All right, I see a lot more questions have come in here, so let's see. I'll do a mini lightning round before we run out of time here. Have you read that Golf is Not a Game of Perfect? It translates to me in trading. It's on my shelf. It's a fantastic book. 7 years experience, found great edge recently. Combine trading terrifies me now. I'm constantly missing out due to fear. Then the closer to passing, the worse I do. Any thoughts? Yeah. I think one of the biggest mistakes people make is they just feel like the combine means that you should be trading differently. The combine should be a vetting process that allows you to prove that your strategy is viable for the live market. You having 7 years of experience, I don't know how much, like, what is that? Was it part-time experience? Were you profitable? Do you have a viable strategy? I mean, lots of traders have experience. I have clients that have, been dabbling in trading for a decade, and that dabbling meant that they built up a lot of bad habits and their system is not as consolidated or as solid as we want it to be. So my worry here is that maybe you're not as, not on as solid ground technically as you might think. And so then the fear, kind of like what happens in golf tournaments, right? Like playing a golf tournament is a test. And if there's fear that emerges, sometimes that fear is just a reflection, like you're just not really good enough yet to play on this golf course, right? I've tried to qualify for the US Open earlier this year and played on a golf course that was very firm, very fast, very demanding. And I didn't experience any fear. I already knew that I was outclassed. Like I just did not have the game to play on a golf course in that condition. But I also have done a ton of work. If this had happened 20 years ago, I absolutely would have felt a lot of fear because there would have been expectations that I should have been good enough to be able to kind of pass that test. So it worries me that there's, some technical gaps here that are, getting exposed in under the umbrella of a combine, which is kind of like a different type of test. When you're trading on your own, there's not other people looking. There's not specific rules that you have to kind of follow. And if you're if you're fearful of that kind of construct, it does suggest either from a confidence standpoint or a structural standpoint, there's something missing. Oh, did you have something there?
The thing that strikes me about, well, the trading combine, a lot of folks have experience. They've traded on their own, whether they've been profitable or successful, at all. It changes the feeling. I've had so many people say, I trade on sim and it's easy. I can easily make money in sim, but I get to a trading combine or God forbid, fund their own accounts. Now there's real skin in the game. There's rules, consequences, accountabilities that you don't really count on or feel when you're trading in just some random sim account. So, it's that addition of risk that changes the decision-making process once again, that is going to make you a better trader. Just having those rules and those accountabilities and those consequences, it is going to make you a better trader because you have those boundaries that you have to maintain. I started playing guitar many years ago, and I asked a guitarist, I said, what guitar should I buy? And he says, well, if you want to learn, get a steel string acoustic guitar because it's the hardest, it's the toughest on your fingers. Mm-hmm. You will be a stronger guitarist because you learn on a steel string acoustic guitar. So that's of course what I did. And I believe that was true. It is, if it's easy, you're not learning anything.
100%. And, there are analogies in sports too, where like I've heard from tennis players and golfers, golfers in playing like kind of match play, where they struggle to beat worse opponents, right? They kind of play down to their competition. And, they make and actually poker players have done the same thing. They say like, oh, I'd rather play up against a really tough opponent than a weaker one. And it's just an excuse for like allowing like this, like a gap in your knowledge to exist. So, the overtraining that you talked about with that guitar, and in this case, right, learning how to follow the rules and trade properly, I think is the opportunity here. All right, any advice for a trader feeling fear of losing, specifically an irrational fear that losses will compound and blow me up? So, right, going back to the mental history, right, there's nothing irrational about that fear. You have to find out why it is rational. Now, it could be because you have blown up in the past, in which case it's not irrational. Like there is a danger. You have a memory. Maybe you have some scar tissue, still pain points of the past that you've got to work through in order to feel like you're on solid ground. or you're just knowledgeable enough being around people, you hear that it happens. So that's number one. It's not irrational. Let's try to really uncover like why it makes sense that you feel this way. And then we can look at the flaws. And some of the flaws might be lack of confidence. It could be, or sorry, not flaws. Lack of confidence might be kind of the area that we're looking at, where maybe you have the expectation that you should be progressing faster, and that like losses then kind of eat away at that sense of progression and ultimately your confidence. It could be that the losses are being triggered by a hatred of losing, an extreme competitiveness, an expectation of winning, and then the anger is going to be so extreme, you're fearing that you're not going to be able to have the emotional control to be able to maintain yourself there. What's a good punishment system for not following your rules? I don't love this strategy. I think it's very kind of binary and basic. And most people have more complicated reasons for why they're violating their rules, going back to my answer earlier. So I'd prefer that route than, like snapping a rubber band around your wrist and like, or having having it cost you money. Like that stuff is, it can work, but it's just not how I operate, because I'm looking for like sustainable long-term solutions where, I would describe that as more of a Band-Aid. What are the dangers of being overly passionate? Like Nikola Jokic doesn't seem to care about being a basketball player, but he ends up being great. I don't know. I mean, I'm not like in the weeds with the NBA, but everything I've seen about Jokic tells me that he is an assassin, that he loves to win or really, really deeply hates to lose, and also like loves the game. I mean, there's no way that any of us could say that he doesn't love the game, and doesn't love killing the dreams of other players. So I don't know that there's a danger about being overly passionate. I think if the passion is like unbridled and doesn't allow you to develop real skill, and you're not as disciplined as you need to be, and you're maybe a bit too sort of spastic and distracted, and like those problems can be there. But I'd rather have that problem than somebody who's just not passionate enough.
Can I mention something about that passion?
Yeah, of course.
There's two different types of passion, I think, when it comes to trading. There's the passion of the action, the excitement of execution, getting in, getting out, taking profits, all of that stuff. That's kind of a shallow passion. The passion that I think traders that really want to be successful have to have is a passion for knowledge of markets, knowledge of how they work, and knowledge of how you work internally. That's the passion that is going to create the kind of deliberate practice, the kind of homework that Jared's talking about doing, that I talk about doing. It's the work outside of the execution that's going to help you succeed long term in your execution. So passion is not about execution and actually trading. It's about knowledge of trading and knowledge of the self.
Yeah, that's great. That's great. I think that the excessive passion that you're talking about that is problematic, I kind of put in the category of like kind of addictive action, more obsessive. I wouldn't call that passion per se. I would call that, like an action junkie looking for the markets to be like a casino, a slot machine, roller coaster, and like loving that, which is not inherently wrong if that's what you want, but you're really going to be that successful doing this if you take that path.
Yeah, the passion can certainly become kind of a disease, right?
Yeah, it can certainly feed on itself in the wrong way, for sure. What's the best way to deal with greed and losses? So again, I think kind of in the same category as before, right? Greed, as I've seen, is less about like the drive to make money. It's about what the money represents, and the money typically represents confidence, progress. So the motivation, it can be sometimes driven by fear, right? FOMO can kind of mirror itself with greed. So if we're going to sort of deal with agreed, you got to understand again the causality for what's going to spark it, right? So all the worksheets and tasks that I've given you so far is how I'd kind of direct you there. Doesn't the fact that trading is only about money, not a sport or fun to do, cause us all these psychological problems that many other professions don't face? No. Every profession that I've worked in, worked with golfers, professionals, PGA Tour players. I've worked with PGA Tour players that have won tournaments, right, all the way down to juniors and amateurs. I worked with some of the best poker players in the world, guys that have won World Series of Poker bracelets, down to amateurs that just love the game. Esports. So I was the head of psychology, sports psychology for Team Liquid, one of the largest esport organizations in the world, for 4 years. We won multiple championships across many titles. I've worked with institutional traders, and y'all are dealing with the same stuff. It's all the same. Right? We are human beings first, what we do second. So yeah, there are unique nuances because the money is yours. Well, maybe not after you get past the combine, not all yours, but the money is like more like kind of front and center. Like I'd love to see a PGA Tour event where every player has to pull 50 grand in cash and plop it on the table, and then that cash is sitting there all week, and they're playing for that. It would change the game. PGA Tour players show up and they've got a lot of guaranteed money already, so the pressure is just different. But the bottom line is, like, when you're under kind of the heat of high level competition, all of these emotions, all of these flaws and biases, illusions, etc., these problems emerge. It doesn't matter what environment you're dealing with. All right, Jared, love the part of your book about expectations versus goals. Would love your thoughts on confidence, as in I'm fairly confident in hitting certain goals versus the expectation of hitting goals. All right, so the difference between expectations and goals is, I think longer than we've got time for right now, but I'll give it to you very simply. Goals imply a lot of learning, ups and downs, setbacks, failures, successes, progress, right? It kind of looks more like a stock chart. Expectations are just like a line. You're just, I want you to make $100 a day, $1,000 a day, $10,000 a month, like whatever the expectation is. I want to be successful by the end of this year. I want to pass a combine, the end of July. If you have an expectation, it's binary. You either do it or you don't. And the problem is that expectations don't really allow you to see the smaller bits of progress that are really key, right? As Hope said, right? The baby steps that are really key to making that progress in that road to reaching that expectation, which ultimately can just be a reframing of how you're treating your existing goals, right? If your goals are implied expectations, that means you're guaranteeing that you will do that. Many of you can't make those guarantees. And even if you do, does it build confidence that's going to allow you to feel like you can keep climbing to the next goal or expectation? And the answer is no, because that's one of the biggest problems with high expectations. Is it's fantastic for motivation, but it really sucks for building confidence. So your motivation stays really high, you keep climbing, but your confidence doesn't go along for the ride. All right. Maybe time for one more question, or we got a bullet?
Do it. I'd sit here all day.
Let's see. We got 2 questions left here. Okay. So maybe I'll get to both these questions very quickly. Is there a way to recognize early that you're falling off the cliff? Yes. Do the mapping. Right. Trading's a lonely job. There's nobody accountable but yourself. Why are you not accountable to yourself? I mean, that's a motivational problem. That's a confidence problem. One of those two is at play here, right? You're either not confident enough with yourself to want to hold yourself accountable, which can sound a little strange, right? But if you are lacking confidence, that means that the things that you want may not feel as valuable, may not feel as worthwhile to pursue with the kind of aggression and intensity and focus and discipline that's required. Or you maybe just lacking the motivation, which means that there's some procrastination, laziness. These could be patterns that you've built up for years. I think this is maybe not exactly what's going on here, but certainly when I was working with poker players, this was a big problem. because a lot of them were young, right out of college, and they didn't really realize that from the first 20 years of their life, they had somebody telling them what to do at all times, even in an academic environment, right? It's like, read these books, pass these tests. Like, it was all handed to you. When you have to make the switch and it's all on your shoulders, that is a very different skill. And if you don't realize that, you kind of got overly accustomed to having other people tell you what to do, which I think is why being an employee is way easier than being an entrepreneur, right? Being an employee is way easier than being a trader, because now you have to be the one who's not only deciding what to do, you got to do it also. And that's the thing that could be a little bit weak here, is not that you're lacking the pure accountability, but you're lacking the structure and understanding that you kind of have to be your own boss, your own manager, your own coach. And having that kind of perspective, sometimes can help. Last question. What could you suggest for somebody who could be overly technical, yet trades well intuitively as well? How to find the balance? So I do have a free ebook on my website called, oh my God, I read it so long ago, I forgot the name of it now. It's on my website. It's a free intuition ebook. And it's going to help you to better understand the nature of intuition. I think to find the right balance, you've got to understand intuition. Intuition is, I think, misunderstood by a lot of people. It feels somewhat mystical, as if it kind of just pops up randomly, and that couldn't be farther from the truth. Just as just a little bit of a warning, though, for those of you who are, let's say, less than a year into trading, don't read the book. Don't read this ebook. You're too new to this game to be able to generate like real intuition. You need to have a large enough skill set, knowledge base, to be able to access intuition. Intuition for macro concepts in the market, right? I mean, I saw the potential downsides of COVID, because I had clients in Hong Kong, and who were talking about it in November, December of 2019. So yeah, I had a macro intuition that something could be bad, but it's not like from a trading standpoint, right? The trading kinds of intuition require real precision and a knowledge base that is very specific to that. So read the ebook, that'll help, and then you can kind of find the balance in between. All right, let's call it a day.
All right, Jared, I told you I could sit here all day.
Well, maybe we'll do that one day, John.
I would like that. It would be great. Yeah, the thing about intuition is that it does take a long time. It's not like getting bitten by a spider and having spidey sense. It is something you certainly have to build up over years, and then it becomes a challenge to recognize the difference between what's real intuition and what's impulse, which is another reason why you should be doing your journaling, using the tools that Jared has been talking about that are in his book, that are on his website, because all of that will help speed your learning curve to recognize when you're starting to build intuition, and when you're and starting to recognize the difference between intuition and impulse. Jared, thank you so much. As always, just a great, fascinating session today. Your answers are just the best, and I'm already looking forward to the next one.
Thanks, John. Well, I appreciate your contributions today. It's nice when we can kind of hit things from both sides, because like I said, I don't have the technical expertise, but having the 1-2 combo here is fun. So,
well, I enjoy every minute of it. So thank you again. And what's the right thing to say for, like, is it break a golf club for your tournament? Is it break a leg? Is it swing easy?
Don't suck.
Don't suck. Perfect. I hope you win.
Thanks, my friend. Appreciate it. Updates coming. The tournament will happen probably before we adjourn again.
I look forward to hearing about it and seeing your huge trophy.
Thanks, Sean. Take care, everybody.
Best of luck. Blessings, everybody. Trade well.